Hello traders, Gary Wagner here. Just before 10:30 in Honolulu, 4:30 in New York. It is Thursday, 14th day of July, and this is Trending Markets reporting to you yet another record new historical high. U.S. equities, Dow trading up 134 points today, 18,506, the low 18,414, and 537 on the high. So we closed roughly 31 points off of the high, a 0.75% gain. Quite considerable. We did have a rest day yesterday. Obviously, we had that doji candle, but what that was significant of was simply consolidation in the market. Standard & Poor's up about 0.5% on the day, 2157. Low 42, high 68. Net change up about 0.5%. What I find interesting with that is that when the S&P tends to be a greater gain on up days than the Dow Jones Industrials, it's kind of a sentiment indicator telling us that those bets are going on higher U.S. equities. Today, we're getting the opposite. We're getting a 50% rise in the Standard & Poor's, 70% rise in the Dow Jones Industrial. Let's take a look at our first chart. So traders, to give you a real sense of what a historical week this has been, I want to start today's show by looking at a weekly chart. This weekly chart, Standard & Poor's E-mini, Standard & Poor's 500 E-mini contract, and we're showing a lot of data points. This is 2013, of course, right here, 2014, 2015, and then the beginning of 2016. These are our hash marks for our years. And we obviously, since 2008, after the recession and the crisis, the banking crisis that we had, market comes down, it begins to recover, of course. We see it actually trade, and then our first set of retracements, we get these retracements along the way. You can see it's not a straight move up, but at the same time, it keeps plodding to higher ground all the way up consistently through the years, 2012, 2013, 2014. You don't see really big dips. You can basically put a channel line in here, and you've got pretty much a straight market moving up, and that really remained the same throughout 2014. When 2015 came in, of course, that was last year, we actually hit these new record tops. Of course, all the way up, we were hitting record highs, but we finally hit some sort of a ceiling because we weren't getting dips right there. Rather, we had the market really trading sideways with the inability, of course, to move above these new historical highs. And then, of course, we ran into some issues. First issue was what we called the August meltdown, or I called it the August meltdown, when news about the Chinese economy slowing down dramatically affected the market. That came in, but within a couple of months, it came in and once again went back to having these highs. Of course, look at the range that comes in. You've gone from having a range that had lows at around 2050 to a range that had lows at around 2000. You can see that right here. And then we get the second part of this W, so to speak, the second meltdown with a lower low yet, tries to recover, then comes back down, but we still, let me draw this in again, but we still got what I believe to be that concrete evidence of some sort of a bottom by virtue of the fact that we really had this W, okay? And so at the same time, we absolutely could not break above these highs. Every time it came to this particular price point, at least on any closing basis, it would just come back down. Well, that all changed this week, and that's why this week is so historical. We'll go ahead and blow that up, and you can see this market traded from 2120 at the beginning of the week to a new record high of 2167, closing at 57. But the key is, look at how powerful of a week this was. Tremendous activity as it just burst above this particular price point. Now, one of the things I talked about on yesterday's show and also put into the commentary was, for a technician, it becomes extremely difficult to start looking at potential points that this market could actually travel to. And the reason that is we have no historical data to reference it. We love to look at what used to happen and try to compare it and see if that's going to happen again. We don't have the luxury of that. So one of the things that we will be working on over the next couple of days is running fib extensions, because that's the way we plot where a next rally should go, whether or not there's historical data and there is good precedence for the effectiveness of using fib extension. So I'll have that again by Monday, and I'll have my forecast on where I think this market could go to overall in terms of the new highs. We know that it's already gone to new highs. We know at some point it will come down. I just want a better and more effective handle on price forecast for those particular models that I'm working on. As I said, brilliant week in the S&Ps and U.S. equities markets. So traders, we also talked about oil, and my belief with oil, you can easily see that we have most recently gone into a downward channel after hitting a price of 52. We've had really declining prices. My sense is between $44 and $42 is where we should find some sort of support for crude oil. And as I said yesterday, I also think that one of the overriding characteristics we will see is going to be a market that becomes range bound. And for crude oil, that's significant because we certainly can't say that this market has been range bound over this last year. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap up and review. Bye-bye.